You were also talking about the IPO last
What
time.
IPO?
Last time, when we spoke, you said you're stuck up because of an IPO.
Oh
So
yes.
is it Embed
So
Capital's IPO?
yes. So we are bankers to this IPO that we are bringing to the market called Chemcon Specialty Chemicals Limited.
Okay.
And the anchor book just got finished yesterday. So our part is to, so we brokers have a discretion to give a certain percent of the overall proceeds to investors that we want.
Right.
और बाकी सब वो जो main book अभी from Monday the IPO will open. The rest is all lottery system. Lottery meaning
Right.
proportionate basis you get.
Obviously, pro rata allotments.
Pro rata allotment is that.
Right. Right.
So as an investment banker, you have the ability to please certain people by giving them a fixed proportion before the main book starts. That's usually 30% of the total money that is raised in the IPO.
Okay. Okay.
So, so that's our currency. We allocate it to the clients who are usually our best clients if they are keen to buy.
Okay. Okay.
So uske wajah se, there is a lot of hustling that needs to be done. Clients, they threaten you, they beg to you, and then also
Yeah,
threaten you.
obviously.
To and fro chalta rehta hai.
Chalta rehta. I think most of them are coming in. Parita ma'am, how much time do we need more?
Well, let's wait. Yeah, I think it is just. Well, it's still 1 minute to go, so maybe let's wait a couple of minutes.
Yeah, just one minute more. We'll wait and we'll start on time.
Yeah.
Sure.
Yeah.
Hello, Surya sir.
Yes. What happened?
Yes.
Sir, speaking of IPO, I have one question. I related to IPO only. In mutual funds, there are there are many categories of funds.
You have a question to Abhishek or a question to me?
Abhishek sir.
Oh, sorry, I was not listening. Sorry. Who's this? Yash.
Yash sir. Sir,
yes, tell me.
in mutual funds, there are number of funds, right? Like index fund, and sector funds likewise. Then why there is not an IPO fund, sir?
Why there is not what? An IPO fund?
Yes, sir. Because if you can see like in recent IPO, when shares get listed, the listed price was like 100% up, sir.
So you are asking me why there are not funds which are dedicated to just investing in IPOs?
Yes, sir. Right, sir.
Yeah, there are there, but they are very small because you can't put a lot of money, because there are hardly. It's not necessary that if there are 20 IPOs in a year, you will like to invest in all of them. Plus, if you like to invest in all of them, it is not necessary that bankers like me will give you all the stock that you want. If the IPO is good, I will give it to my best clients. So that is why the opportunities to invest is very limited, and if the markets are bad, then the IPOs just don't come. So what do you buy? So the IPO funds are there, but they are very, very small. As a business, you are not able to. As a mutual fund business, it's difficult to scale that up.
Okay, sir. But even if if there is one like specific IPO coming, like you can Happiest Mind, for example, Happiest Mind, it got listed at 130% premium, sir. Like,
yes,
right? Even if in 1 year, if like opportunity like Happiest Mind comes and that IPO fund manager invest in it, then like there will be a
see, as
return
an
of
investment
100% in
banker,
years.
see, but as a mutual fund manager, you will only be able to buy, say, 10 crores of stock. तो अगर मैं आपके आईपीओ फंड में मैं 50 करोड़ रुपए डालूं तो आपके पास है ही नहीं 50 करोड़ डालने के लिए, जगह ही नहीं है. सो स्केल नहीं होता है ना, वो फंड कितना बड़ा करोगे आप. See,
Okay, right.
HDFC mutual fund has 1,60,000 crores worth of equity AUM. That is scale, right? That gives you a large scale, a big size. उसके सामने आईपीओ फंड इतना बड़ा होगा तो इतने आईपीओ थोड़ा ना आते हैं. मतलब you don't get so many IPOs to put even 10,000 crores. So IPO funds are
Yes,
there,
right.
but they are very small. They're very small. And they are not for the, so mutual funds don't have it because mutual fund is a product for retail, general masses. That IPO product is for maybe, wealth management has that kind of a product where if you have big money in your pockets, you can go to them and they will kind of give you some sort of a product which will give you exposures only to IPOs.
Okay, thank you.
So we'll just begin. Good afternoon, everyone. I, Ms. Parita Mehta, welcome you all on behalf of Imperial School of Banking and Management Studies to iQuest 2020. iQuest is a platform where various experts in their domains come and interact with our students. Today we are on our 17th session where we have Mr. Abhishek Raichura. He is currently VP Institutional Equities at Ambit Capital. He has an experience of about 13 years of working with institutions like ICICI Securities, Motilal Oswal Securities Limited, and Citigroup. Today, sir is going to discuss with us an overview on the stock market. With that, I welcome you, sir. Thank you for being with us, and I hand it over to you.
Thank you. Thank you very much. So what I'd like to do is, there are not many people. It's a very limited batch, so it's a good thing. We can have a interactive discussion. There are about
Yes.
25 people who have joined. So why don't we take, say, 3 minutes and let's start alphabetically, leaving me, of course, because my introduction is already done. So let's start with Aditya. And you just tell me your name, what's your background in education, and what is it that you are looking to achieve after your B school? What sort of a career are you looking at? If you are sure, you can tell me that you are unsure if you're not sure. So let's do that very quickly. You all have the participation list, so you can go alphabetically. Yes, Aditya.
Hello.
Yes, we can hear you.
Hello.
Yes,
sir.
please go ahead.
Hi, I'm Aditya Karade.
Yeah.
I'm from Nagpur.
Yeah.
I have done my graduation in BSc
Louder, please.
PEM, Physics, Electronics and Maths. Hello.
Yeah.
Yes, sir. I have done my graduation in BSc and now I'm going for MBA Finance.
Yeah. You're looking for any particular path, career? Have you made up your mind? Just you can add that and then we can go to the next one.
No, sir. I just wanna do
You're not
MBA
sure.
Finance.
Okay, next.
Yes, sir.
So we have a few students who have taken admission this year. So they are going to be joining the course from this year.
That's fine. That's fine.
Yes, yes.
Yes. Can we quickly start with the next one?
Ajinkya, can you introduce yourself? Okay, Arun, are you there? Arun, can we start with you?
Yes, ma'am.
Please introduce yourself quickly.
Hello.
Yeah, Arun, we can hear you.
Hi, good afternoon, sir.
Afternoon.
I am Arun Suryavanishi. I am from Latur. I
Yeah.
did my graduation in computer application. I am currently pursuing MBA at Imperial School of Banking and Management Systems. Management Studies, sir.
Okay.
Okay.
Next.
So I want to become an assistant manager, sir.
Sorry?
Sorry.
I want to become in future assistant manager.
Okay.
Okay.
Yes, sir.
Next.
Hello.
Yeah.
Sir, Ajinkya here.
Yes.
Sir, my name is Ajinkya Teli and I'm from Pune itself.
Yeah.
So I am from the batch 2018-20
Yeah.
from the same college, Imperial School of Banking and Management Studies.
Yeah.
And I'm in my final year right now. So this is the time wherein we have to get set for our future.
Yeah.
So as far as choosing my career is concerned, I would say that I want to make my career into forex management.
Okay. Next.
That-
Avinash, Bharat, Champa. Have you guys disappeared or are you shy?
Hello, sir.
Yeah, hi.
Good afternoon, sir. My name is Bharat Suthar. I am from
Yes.
Pune.
Yeah.
I had done my graduation in mechanical engineering and now
Yeah.
pursuing MBA in marketing and
MBA.
my MBA in marketing, sir.
Okay.
And I want to join industrial marketing industry, sir.
Okay.
Yes.
Next.
Hello.
Yes.
Hello, sir. My name is Champa Bhandarkar. I'm
Yes.
from Pune itself. I have done my BCom
Yeah.
and I have currently pursuing MBA in finance. That
Right.
is from Imperial School. And
Yeah.
I want to in career in mutual fund and insurance industry.
Okay.
Hello, sir. Good
Yes.
afternoon. I'm Jayanti Prasad. I belong from
Yes.
Dhanbad, Jharkhand, and
Yeah.
I have completed my BTech in Electronics and Communication from Lucknow itself. And
Yeah.
right now, I'm pursuing MBA in Marketing from Imperial School of Banking and Management Studies, Pune. And career after MBA, I would like to go in FMCG industry.
Super. Next.
Hello, sir. My name is
Yes.
Kirti Murugar.
Yes.
Basically, I'm from Nanded. I
Yeah.
did my graduation in commerce,
Yes.
and now I'm pursuing MBA in finance from Imperial School of Banking and Management Studies.
Yes.
And I want to make my career in investment banking or in forex.
In Forex. Okay.
Yes, sir.
Next.
Nadeem, we can start with you, Nadeem. Nadeem, Pooja.
Hello,
Yes.
myself Pooja Yadav. I'm from Nasik, currently pursuing MBA Finance and looking forward for the banker and investment banking.
Okay. Perfect.
Hello, good afternoon, sir. I am Pranav
I
Kathare.
can't hear you.
Hello,
Yes.
hello, sir.
Yes, Pranav.
I am Pranav Kathare. I
Hmm.
have done my graduation in BCA in Coxit
Hmm.
College, Latur. I am from
Hmm.
Latur. Now I am pursuing in marketing specialization in Imperial School of Banking and Management Studies, and I want to become a product manager.
A product manager. Yes.
Good afternoon, sir. My name is
Yes.
Padmaja Devne. I am from Deglur. I had graduated in computers from Nanded, and I am
Yes.
pursuing MBA Finance in Imperial School of Banking and Management, and I would
Yes.
love to make career in banking industry.
In the banking industry. Okay.
Good afternoon, sir.
Yes.
Sir, my name is Rahul Ranjan. I am from Patna, Bihar. I have
Yes.
just completed my graduation from Zoology Honors.
Yes.
And sir, I would like to join in real estate industry after completing my MBA.
Super. A friend from Patna. That's very interesting. Whom are you going to vote for, Rahul, this election?
Sorry, sir?
Whom are you going to vote for, if I may ask, in the Bihar election?
So I will say Nitish Kumar. Obviously, he has many voters.
Perfect. Next. Is there anybody left?
Yash, Tejas.
Sir, myself Sunubia Sajjad. I belong from Mumbai. I did my graduation into BBA from
Okay.
Mumbai itself. And
Yeah.
right now I'm pursuing my specialization into marketing and looking forward for my future into retail industry, especially into the fashion stores.
Very interesting.
Thank you.
And you're doing your specialization in marketing.
Yes, sir.
Great.
Good afternoon, sir.
Thank you.
Yes.
My name is Tejas Jagnade. I am from Amravati. I did my graduation from arts, which is in Hyderabad, Narayana College.
Nice.
And I want to become a real estate marketer.
You want to sell real estate. Very good. Next.
Hello, sir. My
Yes.
name is Surti Sinha. Basically, I'm from Ranchi, Jharkhand, and I have done BCom Account Honors from Ranchi. And currently, I'm pursuing MBA in Banking and Finance. Uh, I want to make my career in banking sector or insurance sector.
Or insurance sector. Interesting. Very nice.
Thank you, sir.
Hello, sir. I'm
Yes.
Yash Ladani
Yes.
from Nanded.
Yes, yes.
I've completed my graduation in BCom and I'm pursuing MBA Finance from ISBMS and I want to become an investment strategist, sir.
Investment strategist.
Yes, sir.
Okay. Perfect. Great. So Yash is also done. So I can see that one common thing that I see is that except for one person in Mumbai and maybe one or two from Pune, a lot of you guys come from a much smaller town, deeper into the hinterland. Um, there was one friend of ours who's come from Ranchi. So it's a very, very diverse and very, very interesting set of people that you are working with. The reason for doing this introduction was so that I get an idea of a basic idea of who is listening to me and where are they from and what they have done and what they want to do. Can we roll up the slides, please? I believe Tejas was going to roll up the slides, or
Yes, sir. Yes, sir. Yeah. Parita ma'am, make screen share enable.
sorry, Tejas. The reason why I'm not doing is because I have a bad connectivity, so I wanted somebody
Yes,
else
sir.
to do
Yes,
it.
sir. No problem, sir.
Yes, Tejas, I'll just allow. You can do it now.
Okay, ma'am. Yes, sir. It is visible.
Yes, this looks, yeah, we can see it. So given that, we've got a lot of friends who are also from marketing background, I'll keep my interaction session so that they don't feel lonely as well in this particular webinar, which is largely focused on equity markets, as I'm told. So what I would do is I will quickly give you a very broad 10,000 feet understanding of what can you look for when you jump out of your colleges into in the finance sector particularly. So if you can go to the next slide, Tejas. You guys are able to hear me?
Yes, sir.
Yes, sir.
Please go to the next
Yes,
slide,
sir.
Tejas. Yeah. So if you see, this is a broadly how I understand. I mean, this is basically your hunting ground if you are a finance student. And if you break it into businesses, there is obviously lending businesses, which has banks as well as NBFCs and microfinance institutions and housing finance companies and whatnot, right? Then you've got capital markets, about which we will be talking a little bit more in detail. Then you've got insurance, and then there is distribution of financial products, right? Because that as an industry over the last 10 years has become very big. and especially you guys who have come from smaller towns or tier 2, tier 3 towns and cities, this has become a very big opportunity for professionals as well as entrepreneurs into the finance sector, which is the distribution of, which we call as third party products, distribution of mutual funds, insurance, demat accounts, and whatnot, right? So this has certainly become bigger than, say, stockbroking industry over the last 10 years. So these are the 4 areas where you can look to build your career, broadly speaking. When it comes to lending, I'll leave you with a very interesting thought that, so you've got banks as well as you've got NBFCs, right? You guys know what an NBFC is? It is a financial institution without a banking license, right? Which engages into lending activities, but they don't collect deposits because many of them are not allowed to collect deposits. Of course, there are some deposit collecting NBFCs also. So major difference is that they don't have a banking license. So now, what is the role of NBFCs over the last 10 years? NBFCs have been able to do a great job, a fantastic job of distributing financial products, which is basically loans, in remote areas where banks were not able to reach because of their high cost structure, right? So NBFCs have basically borrowed money at a little more expensive rates than banks, lent money at more expensive rates than banks, and have catered to the unbanked sector of the unbanked part side of the economy, right? So NBFCs have played a tremendous role in financialization of loans uh, in the tier 2, tier 3, and remote areas of this country, and hence over the last 10 years had seen a lot of growth before the ILNFS issue happened about 2 years ago. I don't know if you guys are aware about that. So given that many of you are from that side of the business, it leaves me with a very interesting thought that to partner, maybe as an employee or as a business partner, along with these NBFCs is a great career choice. Then you have insurance companies. So again, in lending, which is banks and which is insurance, I have listed the basic functions for which people are required from B schools. One is the selling. So you want to sell mortgages, you want to sell their savings products, you want to sell their lending products. In insurance, you want to sell insurance. Then they've got a product team which designs the product. And then the people are hired from B schools in operations. People are hired on the technology side from B schools, the guys with technology background. And very interestingly, if you see the hiring trends of the financial institutions, incrementally they are only hiring people from the tech background, because as you see more growth happening into the banking and financial services, this incremental growth is happening by investing into technology and not by employing more and more people. So if the bank is growing by 20%, the headcount does not necessarily grow by 20%, it grows by 5-6%, because there is a incremental focus on technology. Technology helps them grow faster and more profitable as compared to human beings, and they help them scale even bigger. So a lot of these hirings that are done by the financial institutions today are from the people who have technology capabilities and selling skills. So these are the 2 areas where incremental hirings are happening from financial institutions. Same goes with distribution, but distribution gives you a unique opportunity to start your career as an entrepreneur as well. You can become an independent consultant and start distributing financial products if you think that you have good connects in the places that you come from and you have good selling skills. That gives you an edge, because a life of an entrepreneur is a little different from the life of an employee, as you would know. Let's come to capital markets. In capital markets, I thought I'll go a little bit in detail because that's what I'm expected to talk about to you today in detail. In capital markets, we've got 3 or 4 broader areas. One is the buy side. Now, buy side is a term which is used for the investment management industry. Hedge funds, portfolio management schemes, mutual funds, insurance companies, they all raise money from their clients through selling some product. Insurance will raise money by selling insurance products. Mutual funds will raise money by selling mutual funds to you. Portfolio management schemes will promise you direct exposure to equity for higher returns. And hedge funds basically do anything they want. They have the mandate to take perhaps more risks if required, and invest in whatever field. So there is a complete freedom given to them in terms of what they want to do with the client's money, and they run on a profit sharing basis with the investors. Sorry about that. So the most popular structures that used to be in hedge fund industry is called 2x20, where they charge you 2% fees and take 20% of profits above a certain threshold. So if you make returns, say above 9%, they take 20% of anything you make above 9%. So that is the kind of structure that is available to you in the financial industry today. All right. Some of you all said that you all want to do forex, but unfortunately, on the capital market side, there are not too many opportunities available because India does not have too many institutionalized forex traders. You only have companies who hedge either their loans or their receivables from their exports, and hence there are banks who offer them certain leverage, certain hedges, and so on and so forth. But the forex trading market in India is not evolved at all. So there are very, very limited opportunities there today. Can we go to the next slide, please? So now the question is, what do you want to do? And I've broadly asked you that question already. So the broad question is what you want to do in life. Now I'll share with you guys my story. I'm born and brought up in Mumbai. I have graduated in commerce, started working for Citibank right after my graduation, found it very boring. I was into operations side. I was in a corporate banking basically, which used to cater to all the corporate customers of Citibank, which were all the MNC companies like Cokes and Pepsis, which came from America. They had banking relationships with American banks, and Citi was one of them. So it was a very boring life. It was a 9 to 9 kind of a job, or 9 to 7 kind of a job, doing a lot of customer queries and maybe doing a lot of work for clients and picking up their phones, talking to them, basically servicing them. And I found it very boring because although it gave me an opportunity to interact because it was a client-facing role, which I always wanted, but still, I found it very mundane after 1.5 years, and then I was already quite fascinated by equity markets because of my background, my family background, and because of certain exposure that I had in my early days of life. I was quite fascinated. Remember, those were the days right after the dot-com boom, where all of a sudden, Infosys and Wipro and everybody had become billionaires and had become one of the richest in the world. And that's where the curiosity had begun. Ki ye hota kya hai? Matlab, how do you end up making so much money in stock markets? And that curiosity has eventually led me to where I am today in my life. And that curiosity grew even more when I was with Citibank, because I used to find that very boring. And I used to be a stock market trader at that point of time, like everybody else. So when we were young, it was one of the best bull markets that the world had ever seen. And then everybody thought that he was George Soros, right? Students like us. So we all thought that, this is what we should do for the rest of our lives, and we can become rich very quickly. So I got into a B school with an intent to get a job in capital markets, in stock markets. Because before doing that, wherever I used to apply, they used to say, you're not even an MBA, you should get your MBA done first. So I thought, okay, chalo MBA kar lete hain. And then after I did my MBA, they started saying, because it was a very busy time at that point, brokers were making a lot of money. Everybody was busy making a lot of money and writing a lot of business, whether they were funds or whether they were brokers. And they all said that you are freshers, so I mean, we don't have time to teach freshers. So that was the industry back then. But the whole idea of me joining a B school was that I wanted a slice of capital markets because I thought I was very, very passionate about equity markets. So at this stage, whether you have just begun in your first semester or you are in your third semester, it would really help if you narrow down your focus into what you exactly want to do. And I gave you a broad picture of what is it on offer from the financial sector to you in the previous slide. And if you have any questions on that, I can answer that maybe later on after I'm done with my presentation. But in my days, what I used to see is that because there was this biggest bull market that the world had ever seen for a long, long time. Everybody wanted to become research analyst and investment banker and fund manager and whatnot, right? Um, Everybody, and basically nobody had an idea of how to go about it, because these are the best employers in the financial sector, stock market guys and the buy side and the sell side and the wealth managers today hire from the IIMs. They are the best managers, so they get the best talent pool. And then we all were wondering that how do we get a piece of that, right? So that's how my journey started into equity markets. I was very clear that I don't want to be an investment. I didn't want to be a research analyst, but nobody showed me that table that I showed you. So I was not very sure what I wanted to do, but I just wanted to be associated with equity markets, buying and selling of stocks. Can you go to the next slide, please? But then if everybody wanted to, it was such a big craze back then. I don't know whether it is even now in your college, everybody is fascinated about equity markets and stock markets, the guys especially who have opted for finance specialization. Now, 15 years, if I look back, I mean, my expectations and the reality were completely different. So I remember when I started in retail. My job was to advise all the branches of Motilal Oswal in rural areas, and I was given south and west and north eventually to handle. So I used to call people out of say Nasik. I used to talk out of people out of our branches out of Nasik and help their customers buy and sell stocks. So I used to give them advice: "Ye kharid lo, ye bech lo." Help them trade, help them invest, help my branch managers make grow the business. But I saw that in 2007 when I joined, nobody wanted my advice. Everybody was George Soros themselves. Everybody was like buying anything. Like you bought anything at 10 rupees back then, it was a very reasonable chance that you would sell it at 12 in the next 2 months, if not 4 or 6 months. So it was a party going on and nobody wanted my advice. What I'm trying to show you today here is the actual world of investing, buy side or sell side. What is the difference? What is the difference between the perception and reality? हम सबको लगता है, we will get that Gordon Gecko in our lives, like in the walls of Wolf of Wall Street, and we will become the biggest trader there is on this planet Earth, and everybody will love us, and we will make a lot of money. But usually it doesn't turn out that way. And I have put up a few charts to show you the difference between expectations and reality, and what you should expect if you dare to step your foot in capital markets as a career. So this is the first very interesting chart. My first week in the job, second week in the job, I was made to. I started calling clients and started giving them advice. So sorry, before this one, right? So what I do currently, I basically talk to all the foreign investors which are sitting in UK and Europe. My as a sales guy, my geography is UK and Europe. So I have to go and convince them and make them buy and sell stocks here in India, invest in India. In the process, they give me commissions, because the moment they put a trade, I get commissions. I also get research dollars if they like my research, right? So my job is to sell India. But look what India has done over the last 10 years. Now this is the comparison of the returns made over the last 10 years in Nifty, Dow, which is a US market, FTSE, which is UK market, KOSPI, which is Korea, and TWSE, which is Taiwan, right? Now, if you see, and obviously, if the currency, I've changed the currency into USD denominated, because let's face it, the global investment all happens in USD, right? So when a foreign client comes and invests, he has to show returns in US dollars, correct? And look, if I compare the returns in India in US dollars, look at the last column there, which is annualized return of Nifty versus few of the developed and emerging markets that I have listed down. India is not a very attractive financial destination if you look at the returns, right? So then what are you selling? Are you selling lemons? If I ask you one question, what do you want to, which kind of company you want to be associated with? Would you like to work for an Apple, or would you like to work for a company like Micromax selling shitty phones? Would you like to work for BMW, or would you like to work for a Tata Motors, still selling cars which make a lot of noises? You would obviously want to sell the best product available to your customers, wouldn't you? Maybe not as a direct sales guy, but even if you're working with on the product side, say in product development, you would be wanting to associate with something which is the best in comparison, right? But look at here, it seems as if you've been selling lemons to foreigners, right? So this shows you, and this is something that everybody knows, right? You may not have known it because you're students and you're just growing up, but people know this, and hence the whole business is of investing and advising is very, very difficult, and success doesn't come easily because, as you can see, there is no performance. Can you get the next slide? This is, as I was saying, this is basically on my first week of job, second week of job, and I was calling the branches, the franchisees out of Nasik and out of Ernakulam and out of places like Trichur and Surat and Vapi and Delhi, Chandigarh. The first day of my job, these are the multi-baggers, or what you call blue chip stocks, that I push to my investors. That if you buy these, these are the stocks you should buy for your children, right? Look at the annualized returns that these companies have given over the period of last 13 years. Now they say that bhai, stock markets mein long term sochna chahiye. But even after 13 years, just look at the returns. And these are the companies which are surviving and still there on the stock exchange. There are so many which have just gone bankrupt. Kingfisher, or some of the infrastructure companies. Infrastructure was supposed to be the hottest sector back then. So very quickly, not very quickly, but gradually, I realized that, in stock markets, the universe is not made up of atoms. It is made up of stories. Can you go to the next slide, please? So basically, what I told you is that life as a stockbroker or life as a fund manager is extremely, extremely difficult, because you are expected to predict future. You're expected to predict the winners of tomorrow with the limited data set that is available to you. And it's one of the toughest jobs in the world. Now, let's come back to the investment banking job, right? Like selling IPOs. Now, this is what the popular, like if you go to the smartest investors that have ever lived, they will tell you that things like IPOs are not a good investment. They are not a good investment avenues, for the simple fact that a company comes to sell his shares when it is the right time for them to sell the shares, when the markets are giving them the right value. So they extract every piece of value that is there to extract, and hence the timing is in their favor and not in your favor, and hence IPOs are always bad investments. So then again, you are thinking that, as an investment banker, what are you doing? Are you selling iPhones, or are you selling Micromaxes? Right? So it all looks very glamorous. But when you sit and do it, it is one of the most toughest jobs that you would have ever done if you get an opportunity to do it in your lifetime. Can we go to the next slide, please? Right? Some people said that they wanted to become fund managers. So I just gave you a couple of slides on sell side, that how difficult it is to advise and how difficult it is to sell as an investment bank, products as an investment banker. Now let's come to fund managers. There is another big trend that is going, which is passive fund management, right? Passive fund management is basically, putting money in an index, basically replicating an index and not taking a decision whether which companies is more better than the other and hence investing in that company more and less in the other or nothing in the other. A passive fund manager basically says, okay, if it is a Nifty fund, then I just put money in the Nifty stocks in the same proportion as their weights in Nifty, and then your returns will be exactly that of Nifty returns. So a fund manager does not use his brain. There is no requirement of any analyst, there is no requirement of any fund manager, and the costs are fraction for an investor of what a fund manager, of what an active fund charges, right? So I've given you a few data points that the net fund flows flowed out of the active into passive has been 68 months out of 69 months. So basically, over the last 5 years, every single month, you are seeing that money is going out of active fund management into passive fund management, thereby not needing the role of a fund manager or an analyst at all, right? And this trend has now started to catch up in India. Just look at the second point. The asset under management of all ETF, which is basically exchange traded funds, which is basically passive funds, has crossed 1 lakh crore even in India. And it was just 7,000 crores about 5 years back. So if you do the math, this industry is doubling every year, right? So even in India, this has become a big trend now. And hence, and also, if you see that the active fund managers, 95% of them globally, they don't beat the index. So they are not able to give you returns as much as their benchmark index, which could be an emerging market index or the Dow or the FTSE, depending upon which fund that is. So if you're not able to beat an index as an active fund manager, you can't even blame the investor for going into ETFs. So, so this basically chart shows how the business is getting disrupted, even in the fund management side. Can you go to the next one? Next slide, please. Right. So now I am trying to paint a very, very, very depressing picture in front of you that today, if you see all the capital markets businesses or lending businesses, the profitability is actually going for a big toss. Look at the banks, right? The spread between a 1-year term deposit and a housing loan, which is the safest loan, used to be 3%. 15% kamane milta tha banks ko. Now, that is reduced to 1%. The AAA borrower today doesn't go to the banks or NBFC. He goes to the bond market directly and raises money, thereby eliminating the profit pool of the banks. So the banks, if they have to do lending, they have to do lending to a non-AAA customer today, thereby taking more risk and thereby losing more money. We all have read a lot about the NPA issues, right? So today, if you see the lending institution, they are getting disintermediated. Financial disintermediation is a big risk today for the current financial sector, because either banks are either getting disintermediated by NBFCs, or they are getting disintermediated by the tech companies like Paytm, which is stealing away all the savings pool from them. And similar thing is happening on the other industries as well. If you come to stockbroking, you have Zerodha, which basically says, don't give me brokerage, but trade as much as you want, right? So the product is completely different. Now, where I started, Motilal Oswal Securities Limited, we used to make anywhere around 100 crore of profit just from the retail broking business. Today, that profit pool is about 150 crores. Now, if you start, charging zero for transactions, then where is the profit pool? It's just disappearing, right? So again, there is innovation, disintermediation, which is eating away into the profit pool of a lot of these brokers. The profit pools of fund managers is getting destroyed because of the passive fund management, as I told you just before. That you don't need fund managers, you don't need cost, you just replicate the indexes. And anyways, the active fund managers are not beating the indexes. So what's the point? So what used to be a 2% fees today is a 75 basis point fees for most of the fund managers that you talk about globally. So the profitability is going for a toss even there. Um, Wealth management is a growth or a sunrise industry in India because since demonetization, whatever financialization of savings that you are seeing in the upper class, in the rich class, you're seeing a lot of them are now going to wealth managers, and wealth managers like Kotak and India Infoline, and there are a few others who are growing leaps and bounds, like mutual funds did about 3 years, 4 years down the line. Today, a wealth manager gets paid anywhere between 20 lakhs to 2 crores, depending upon how good you are with your customers and how many customers are onboarded with you and what sort of a business you bring for the company and whatnot. Um, so that is the one area where you see a lot of growth even going forward, because with financialization of savings, with a lot more people investing into capital equity markets now, this is a booming sector. Um, so then, if the point is, if there is all, I mean, if there is so much gloom and doom, then why do you look at equity markets at all? In my experience, I think capital markets today offer you the best uh, uh, career opportunity, despite all the hard uh, all the hard work and all the stress and all the effort that is required today to sell something which is basically nothing better than a lemon, is because capital markets will give you an exposure to a lot of glamour. Let's face it, like Indians, we are fascinated by capital markets, right? We certainly look upon somebody with a lot of respect when you hear that he's an investment banker, or he's a investment analyst or a fund manager. There are constant surprises, constant learning. The story is evolving and getting better and getting interesting every single day, every single year. It's like Game of Thrones. You are in the good company. The industry employs one of the best B school students every year, because let's face it, they are the best pay masters, and because they are the best pay masters, the rewards are very, very high. Some of the people in our industry, whether it be an analyst or a sales guy, gets paid more than a CFO with an experience of 15 years plus. So if you reach that level, there are a lot of rewards to be had. There is a satisfaction of running a marathon. You actually are constantly working 13 hours a day for 5 days a week, and it burns you out. And then at the end of the day, there is a satisfaction that you've done something. Uh, and more importantly, I think this industry will give you a chance to meet the sharpest and the brightest minds in the country, in the world. Today, if you're an analyst, you have exposure to meeting all the corporate CEOs, promoters, the best fund management talent that is available globally and in India, because you talk to your clients, which are the fund managers, hedge fund managers. These are very, very sharp and very, very intelligent people, and you grow with them. But most importantly, because there is a lot of stress and because you are expected to run on a treadmill 24 by 7, you should be joining capital markets business only if you are very, very passionate about stock markets, about the job that you are doing. Uh, of course, the lack of passion can be compensated by the amount of money you make at the end of the day, which is also a good motivator. But these are some of the good points why you should look forward to a
Parita ma'am?
Yes, just a minute, sir. Will be there.
Yeah, yeah.
Yeah, I'm so sorry. Are you able to hear me?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes, sir.
Sorry, I'm so sorry for this bad connectivity. I am not sure when you lost me, guys. Can someone just tell me where at what point did you lose me so that I can start from there? Hello?
So you were talking about passion.
Yes. So passion is, I think, the prerequisite because this industry burns you out, and uh, the, it's full of there is a lot of stress. You are just basically on a treadmill for 12 hours a day for 5 day a week, and it's constantly calling. Particularly if you're an analyst, you often end up working about 70, 80 hours a week, which is which can get really stressful at times, and your family life goes for a toss at times. So that is why, that what overcompensates for a not so good work life balance is basically the fact that you are passionate about something that you are actually engaged into, and that's what makes you carry on. um, so what I would do now is, I will open the floor for maybe question and answers before going through the last slide, um, which is basically some of my learnings. And after the question and answer session, if you're keen, I will just go through the last slide on what the learnings are over the last 15 years, that are worth sharing with you guys. But before that, let's stop and get questions or thoughts or anything that you want to ask or suggest from the audience after hearing me for about 30-35 minutes.
Hello, sir. Kirti here.
Yes.
So my question is, if we see financials of the company, is it's good, but if we see share price of the company, it's in decline. Like if we take
Can
example
you
of Coal India.
take the presentation off, Tejas, so that I can, so people can see me and I can see people?
Yes, sir. Yes.
Yes. Are you able to see me now?
No, sir.
I wonder why. There you go.
Yes, sir.
Yeah. Sorry. Go ahead.
Yes, sir. If we take example of Coal India, share
Yes.
price is in negative from last 5 years. But if we
Yes.
see financials of Coal India, it is not that bad. So why it
Yes.
is so?
That's a very, very intelligent question. I believe you are tracking stock markets very actively, Ms. Kirti.
Yes, sir. Yes.
That's a good question. And there is a very big debate going on in the world on value versus growth, quality versus non-quality. Because what we are seeing is that there is so much of money available in the system. Since the beginning of the year, because of the COVID pandemic, just for example, the Fed balance sheet has expanded by $3 trillion. So there is $3 trillion worth of extra money just pumped in by the US. And all that money is waiting for good returns, right? So the question is very valid, that why are people not buying Coal India, which is available at a 6%, 7% dividend yield? And the valuations, if you see, it looks cheap, it looks very profitable,
Yes, sir.
and the yield is very good. These are the matrices that you are referring to, right?
Yes, sir.
And yet nobody wants to buy them. Today, Kirti, there is a lot of debate, particularly in India, where there is a big argument going on value versus growth. And today, people are willing to pay any price if there is a little bit of a certainty on growth. So a company like Hindustan Unilever, which does not grow much, but grows by about, say, 10 to 12% every year, but the level of certainty of that growth is very, very high. And hence people are just willing to pay any price to a stock like Hindustan Unilever versus a Coal India, which is going through a lot of issues. One is on the business side, where, Kirti, when Mr. Modi came, one of the big things that he did, he went and signed the Paris Accord along with other different nations in order to preserve the climate and, be committed towards not being very carbon efficient. Am I correct? Now, you see, world over, there is basically a hue and cry in terms of reducing your exposure to coal, because that is very harmful for the society as it causes pollution. And then the world is looking for greener energy like solar, wind, thermal, and nuclear. And incrementally, the share of incremental power that is generated from cleaner sources is much higher. For example, after Mr. Modi government has come, if you see the power produced even in India, the power produced from cleaner sources all of a sudden is 20 to 30% of the power produced in the nation, which was just about 5 to 6% back then. So there is a lot of thrust in cleaner power going forward. And there is a new concept in the global financial markets called ESG investing, which is environment, social, and governance, which is a model which is built into your investment thesis. And if you find any company which does not fit into ESG, for example, it is not good for society, it is not good for environment, or the basic governance principles of the company are very, very bad, the investment managers are incentivized to throw such companies out of their portfolio. And this is because there is a thrust towards responsible investing, that I am a billionaire sitting out of US, I have made $1 billion, which I've given to fund managers. I want them to invest into companies which are very, very responsible and take care of this ESG factor. And Coal India today, unfortunately, does not fit into that. So one is the growth is not there because the world is moving to cleaner power, and the cost of cleaner power now is reducing. So the cost of producing a solar power today is as much as of cost of producing a power generated out of coal. So cleaner energy is getting more. The cleaner energy. Are you able to hear me?
Yes, sir. Yes.
Hello.
Yes, sir. We can hear you.
Can you hear me, guys?
Yes, sir. We can hear you.
Hello. Yeah. Okay.
Yes, sir. We can hear you.
Okay, perfect. So yeah, so as I was saying that because of this, a lot of fund managers are globally are forced to sell Coal India and NTPC because of their exposure to coal, which is not a clean energy. And in their annual assessment, when they are getting paid bonus, there is a component which is linked to ESG. So if their portfolio is ESG compliant, they get that additional piece of bonus. Otherwise, they lose that bonus, and hence they don't want to buy it at any price. So if you see Coal India and NTPC and such stocks, the foreign these were FII driven stocks also. So if you see the foreign holding, it has come down significantly over the last 5 years, particularly over the last 2 years. The other reason is that the government of India has constantly sold the stock. So Mr. Modi, after he has come, the divestment ministry has gotten very, very active. So if you see the amount of shares that have been sold by the government of India has picked up quite a significant pace over the last 6 years. So there is constant supply of shares from the government of India because they need money to bridge the fiscal deficit. So they have been also selling very, very aggressively. I think these companies are good companies, and once these factors play out, hopefully at some point the market should come to the senses and re-rate some of these stocks. Sorry for the long answer, but then I thought I'll cover all the aspects.
Yes, yes, sir. Thank you, sir.
What you guys should do is, if in case for those who are very much interested into financial markets, capital markets and stock markets, and they want to make careers into investment banking and equity analyst, I would urge them sincerely to take up this time to read a lot of things, which, I mean, these are the kind of things that you should know already. You should read foreign journals, you should read things like Financial Times, you should read Indian business newspapers. You should read the columns that come in some of these business newspapers. And these are the kind of issues that you should keep yourselves aware about. Otherwise it will be very, very difficult for you to get into any profile of repute into equity markets, um, when you come for the job. Any more questions?
So I have one question.
Who is this?
Yash.
Yes, Yash. Tell me.
So, what education what things are required to get into like investment or investment strategists?
Oh, well, you need to be very clear what you mean by investment strategist, Yash, because I help me
So
explain what is
specifically in
investment.
equity, sir. So specifically in equity, sir.
So,
If
Yash, basically, um, you know, I think there is no substitute to reading. You will have to read a lot, Yash. You should basically know your sources from where to get updates from. You should know what is happening in foreign markets. You should know what is happening in Indian markets. You should know what the fund managers are thinking and writing. You should know what the foreign fund managers, guys like, everybody knows Buffett, but then there are some great fund managers sitting out there, Ray Dalio, Seth Klarman. You should subscribe to some of these in places like Instagram or Twitter or LinkedIn, and then follow what they are saying and what they are doing. Like what I told you about ESG investing right now, active versus passive. So when you come out of job market, what people will look for is basically whether you are well versed with some of these things which are going on in the industry and how well versed you are with them. Nobody is going to feed you any knowledge. So you better take all the time that you have right now in your B school to not only do your projects and give your exams and attend your lectures, but also to read and discuss amongst yourselves some of these issues which are prevalent in the market today. So I guess along with your qualification, which you are taking care of, what is even more important is your willingness to read, and read.
Yes, sir. Thank you, sir.
When I was your age, as I was telling you that it was a very big bull market, and those days, China was the biggest reason for the bull market globally. They were consuming literally everything, and that's why the world had a massive commodity boom as well. So we used to read a lot on commodities, and commodities was a hot thing back then. We used to read a lot about which country consumes what commodities and produces how much and exports how much, who are the net importers, who are the net exporters, when is the supply of iron ore likely to get depleted, because in those days it was such a big bull market and China's consumption was so big that even people like Tata Steel and all made billions of dollars of investment securing themselves the iron ore mines and coal mines, because even they thought that ये खत्म हो जाएगा 10-15 साल में, फिर कहाँ जाएंगे. So it was such a crazy time. So you read a lot of those things and you kept yourself abreast of what was going on then, so that when you step out of your college and meet a person like me for a job interview someday, the least that would be expected of you is to know all these things, which are currently going on.
Yes, right, sir.
Start by reading books. And if you go through my presentation, there is the last slide which I did not share. Maybe if you want to put up, you can put up, Tejas. So I've mentioned some of the books that you can read. So I've mentioned 3 or 4 or 5 books which you should definitely read if you want to prepare yourself for the job market in the financial sector. So if you move to the next slide from this. Yeah. So these are some of the books that you guys should definitely read if you're looking for a career in financial sector, whether it be banks or insurance. I think the first book, What the Customer Wants You to Know, I think that is one of the most simplest and the best book that I've read as a 25-year-old, because I began my career in sales eventually, in equity sales, and I started with retail because nobody would hire a person in institutional equities without a background or without unless you are coming from an IIM or something like that. So I had to start with retail, give 2-3 years there, and then graduate into institutional brokering or institutional sell side business. But these are some of the books that I read which have shaped my thought process as a human resource, as a useful resource for the company. So what your customer wants you to know help me think about how to think of myself as a sales guy and how can I be useful to my company. in a way that I get good growth in the company and I graduate to a higher level very quickly. Understanding Michael Porter is a book that I think is a fantastic book. And the first question asked by Kirti, you should read this book. This book will give you an insight into the kind of businesses you should buy, the kind of businesses you should look for. And then after reading this book, when you will analyze the company, you will find that the companies that you would like after reading this book, they are not cheap, they are expensive. So what is cheap in stock markets is cheap for a reason,
Yes,
and you
yes.
should not run after that just because it is cheap. Reminiscence
Hello, sir.
of a stock operator is my favorite book because I am not an investor. I've hardly held on to any stock for more than 2 years, 3 years. There are only few exceptions like Kotak Bank and here and there, which I've held on for more than 5 years. So I consider myself as a trader because my investment horizon is not more than 6 to 12 months. So I consider myself as a trader, and this book has helped me a lot um, to understand myself, to understand my personality, and on the basis of my personality, what should be my style. Because what a lot of us will do is basically you replicate the investment styles of the gurus that you think you have. So in my days, Rakesh Jhunjhunwala was a big name in 2003 2000. He'd just become a billionaire back then, and he had become the talk of the town. So we all used to copy his thoughts, copy his style, measure his portfolio. And Warren Buffett was always there. uh, so you had guys like Ramdev Agarwal. So you copied a lot of their style, but then eventually when I read this book, I thought I learned that every human being is different, and you should stick to the style which is best suited to you. um, Capital Returns is another fantastic book which tells you about the business cycles. And again, why certain stocks are cheap, because they're going through a very bad business cycle or expected to go through a very bad business cycle, and hence market sees that is going to happen, and hence it appears cheap because the current earnings are not expected to sustain for the next 3-4 years. They're likely to dip. um, Principles, on a spiritual level, Ray Dalio is considered to be, so basically Ray Dalio is the founder of the biggest hedge fund in the world, which is Bridgewater. And he's written this book where he has written down the learnings of his entire life, and he calls them principles, and he shared them in this book, and it is a fantastic book to read. If you get a chance to, in fact, you should actually.
Yes, sir.
And then the last slide, it just gives you some of the things that I have learned over the last 15 years in my career, and I have tried to put them in one lines so that uh, I make it crisp and you are able to understand them. So if you can move to the next slide and just go through it, um, that will be all from my side, and I'm happy to answer further questions if you have. The last one is my favorite, fear versus love. I mean, in life, fear is going to be a player in your life. It is going to play a major role into all decisions you make. um, Fear is going to be the biggest factor, which will make you take decisions which you should or should not have otherwise made. uh, I would leave you with a quick thought that you should basically analyze your life going forward, because over the next 10 years you will make life changing decisions in your early stage of this, in your current stage of this life. You should analyze whether the decisions are you making, are they out of fear or out of love, and you should always choose to make decisions out of love and not out of fear. So with this, I'll just basically finally just hand over to you guys. If you have any other questions, if you want me to ask
Hello, sir.
anything career related, please go ahead.
Hello, sir.
Yes, who is this?
My name is Surbhi Sinha.
Yes.
Sir, my question is why stock markets are booming when economic chips are down?
That's a very interesting question. See, stock markets are always forward-looking. So there is a technical, so there are technical versions of arguments, and of course, in stock markets, as I told you, in stock markets, the universe is not made of atom; it is made up of stories. So there are a lot of stories which will justify what is happening in stock markets today. And you have a very valid question because nobody expected in March that the stock markets are going to be where they are today. Everybody was expecting that the stock markets are going to be under a deep pain because of where the economy is today. Um, there are two or three reasons. One is, of course, you will get a technical reason that there is so much of liquidity, and the liquidity is chasing returns. So wherever there is certainty, people are just pouring in money. So one theory is that liquidity is causing the asset prices to go up. As I told you, the US itself has expanded the balance sheet of the Fed by $3 trillion in this year incrementally. Then you've got Europe and UK, and then China has given stimulus. So there is a lot of liquidity chasing a very little stock of debt and equity. So that is given as a technical reason for the markets going up. The other thing is that stock markets are always very forward looking. So when we had a fall in the month of March, basically the market had discounted that this year, which is the March 2021, FY21 as we say, is a complete washout. And hence, the markets had, by March, when the markets fall 35%, they had factored in a washout year of FY21. And then market started looking life beyond FY21. What will 22 look like? And perhaps market today is thinking that life will come back to normal in FY22 once the vaccine is found and the fear of COVID is behind us. And that is where you are seeing a lot of businesses have come back to the levels where they were in Feb, because the market is saying that these businesses will be unaffected in the next year once COVID is behind us. Of course, if you see, markets are not stupid. If you see banks are still about 20-25% below what they were in Feb March, and banks are like 30% of the market today. Aviation stocks have gone nowhere. Hotel stocks have gone nowhere. Stocks like PVR, Inox, which are exhibition related, which are related to social gathering, are going nowhere or have not done well relatively. So yes, market is punishing something which they think is going to be a problem even in FY22. But perhaps market today is thinking that in FY22 we will see the back of COVID and many of the businesses will come back to the normal, and hence market has come back to where they were in Feb. Whether they are right or wrong, time will tell. So today, when I talk to my fund managers and investors based out of UK, they say that there is already a debate which has started whether there should be another lockdown. If something like that happens, you will again see markets coming into a lot of panic and stocks collapsing because of that. So as situation unfold, markets will find out whether it is right or wrong and then take a necessary course of action.
Okay, sir. Thank you.
Any more questions? Anyone wants to ask anything? I think that's it. So you've covered almost all the questions of our students.
Perfect. Thank you. So
Yes.
I'm there on LinkedIn. I'm there on. I mean, your school now has my email ID.
Email. Yes, yes, sir.
I'm there on LinkedIn as well. So if any of your students wants to drop an email or send me a message on LinkedIn for anything, they are happy to do so. I'll be happy
I'll
to
share
take
the
their questions.
details with. Yes.
Yeah, sure. Perfect. Thank you guys for taking out time on a Saturday to listen to me. Thank you very much for your patient listening.
Thank you, sir, for
If you allow
taking
me,
out
we'll call it
time.
for the day. Sure.
Yes,
Sure.
yes, sir.
Thank you,
Thanks
sir.
a lot, sir.
Thank you
Thank
very
you.
much. Thanks, Surya. We'll keep in touch.
Yeah,
You,
thanks,
sir.
Abhishek. Thanks. It was
Bye.
nice. Bye bye. Take care.
Thank you, all the participants, for being with us today. Have a good day, everyone. Thank you.